is a paid program. The views expressed are not necessarily those of the management or ownership of SKOR North, KSTP AM 1500.
This is the place to talk about everything related to the home. Buying or selling real estate, financing and improvements that can help increase your home's value. This is Minnesota Home Talk on SKOR North. Here's your host, Jason Walgrave.
Well, that's not quite true. No Jason Walgrave today. Right now, it's just me. Mike Overson's on his way in, and we're just going to be talking a little bit about insurance in this cold time of year and what you can do to prevent a claim. So, everybody knows about the basics. Theoretically, anyway. Everyone knows that you should turn off your exterior spigot. Everyone knows that when it snows, you should clear it off of your roof, of your walkways, all that kind of stuff, as much as possible to prevent ice buildup. But the question is, what about when you injure yourself? What can you do to prevent those types of injuries and the types of exposures from having people coming in to help you prevent those types of injuries? Well, it's a big topic. I don't want to dive too deep without getting into your specific scenario, but let's just say, for example, you have a front walkway that the water drains directly onto. I think I hear Overson now. If you have ice built up there, the number one thing that you want to be doing is mitigating that, because a claim against your property for liability can be a huge issue in winter. Man, is this too heavy to start the show with? What do you think, Rob?
I think it's perfect.
You think it's perfect? What do you think, Mike? Oh, we've started.
Oh.
Mike Overson, everybody, just walked into the studio. He's sitting down. We, of course, also have Ryan Boyd coming in. He's thinking about it. Sit right over here in this corner, Ryan. We're going to get you right on the air. Because that's where Sush likes to sit. Mike, how was your drive-in this morning?
You know what? Outside of me being this late, it was actually very pleasant. I didn't slip once, I didn't hit anyone, and I didn't get pulled over.
Well, those are all important things.
Right?
You know, you're checking the boxes, right?
Yeah. You know, it was a successful trip in. I mean, I can't complain one bit.
Ryan, it's been a long time since we've had you on the show here.
Yes, it has. Yeah, it's great to be back. Perfect.
Ryan,
I just turned on my mic.
Yep.
Ryan's first time in the new studio.
Yeah, exactly. You haven't been into our fancy podcast sticks. So.
This is my Virgin Voyage.
No, we're doing pretty well. It's
Impressive.
It's impressive, but it's a little seat of our pants, it seems like, today.
A little bit. That's all right, though.
What are we going to talk about today, Mike?
Well, we'll probably talk about cars. You know, the stuff we like to talk about.
Yeah.
And we'll probably talk a little real estate as well. And there's some insurance stuff we're going to bring up, too.
Oh, more insurance stuff?
So I hope you're ready.
I'm always ready. I just started randomly talking about liability, so...
Oh, nice.
Yeah.
That's a fun topic.
It's really, really exciting stuff, let me tell you.
Riveting radio. That liability insurance.
Especially this time of year.
I know. That's what I'm getting into, is it's like, you know, ice exposures are huge, both for damage to your own property, and, of course, you don't need them. You'll be fine. And on top of that, the liability. You know, if you've got your walkway and you haven't cleared it and someone slips and falls, bad times ahead.
Yikes.
Yep.
It's perfect timing, especially with the weather last night. It looks like a wet banana. It was like a slip and slide trying to drive out there.
Yeah, there was a lot of cars last night. Driving around yesterday was suspect, for sure. You had to have your both hands on the wheel. For sure. Did you tell the listeners about our giveaways?
Yes. I didn't, because I don't know what we're giving away yet today.
So we are going to be giving away 2 pair of T-Wolves tickets.
Sweet.
These tickets are, all 4 seats are right next to each other on the first level there at the Target Center. They're pretty sweet tickets.
Are these the same seats that we've had on the show for quite some time now?
So previous to this year, the seats were split up. There was 2 on the first level. There was 2 up on the third level. And so now we have all 4 seats right next to each other, right on the first level there. So they're sweet. It's very, very nice. So we're going to be giving away those 4 tickets to the best question of the morning. So you can send your text question to us at 612-202-8321. You can also call in with your question at 651-647-2910. Again, 651-647-2910. You can also watch us on Facebook. You can submit a question through Facebook, but that does not get you in the running for the tickets. So if you do want to get in the contest here for the T-Wolves tickets, you either have to call us or text us. So again, that text line is 612-202-8321. And the phone line is 651-647-2910.
Not sure if this qualifies for the best question of the day, but if you're a guest in the studio, can I get on my cell phone and call in and try and win? Because they'll sound like some pretty sweet tickets.
Ryan will be like, oh, hey, where's the restroom? I got to go quick. And he sneaks out and calls in with a question. Yeah, this is
this is Jack Hansen.
Why does your voice sound so familiar, Jack Hansen?
No reason. Here's my question. Are the tickets still available? That's my question. Did I win them?
Can I have those tickets, please? Thank you.
Can you focus on my question, please?
I love it. So we got the phone lines open again, 651-647-2910. And then the text line is 612-202-8321. We got Ryan Boyden in the studio with us. Not a stranger to the show at all. First time in the new studio, however. But we're going to have Ryan explain what he does here. He is with Last Switch. And Ryan, what is Last Switch?
Last Switch is a business consulting firm. There's a lot of different areas that we help business owners. And the main reason, I'm on the show this morning is to discuss one of the biggest topics, one of the biggest issues, one of the biggest and most lucrative things that business owners are facing. And we've been uniquely positioned and represent a team of forensic ERTC tax specialists. And again, if you're not familiar with these tax credits, it's kind of the next evolution in the economic stimulus. It started, a little over a year ago with the PPP loans. And again, everybody out there, whether you're a business owner or not, is familiar with the PPP loans, the process. There was, 2 drafts, 2 phases of that. You might have gotten the first draft, you might have gotten the second draft, but it was a lifeline. It was an absolute total lifeline to business owners when they needed it most. And there was, nobody really knew why they qualified or, hoped they did. They crossed their fingers. Sometimes, the first draft, the second draft, if you got declined, it was like, okay, we kind of know why. But again, there was just a lot of questions surrounding it. And then you apply, you get approved. And then the next step is, are we going to get forgiven? What's going to happen there? Sure enough, if everything was done correctly, if you administered those correctly, they should have gotten forgiven. And now enter the end of 2020, all of 2021, and there's these ERTC tax credits. Tons of uncertainty out there. A lot of companies that when they first looked into it, they didn't qualify. They were told that they didn't qualify, but it was evolving. There was basically ERTC 1.0, 2.0, and 3.0, and you may not have qualified until 4 or 5 months later when they finally started drafting or finished drafting all of the criteria to try and include and help as many business owners as possible. And so what was left is, CPAs trying to navigate these waters that were changing constantly. And again, in many cases, they had, when their clients first approached them at the end of 2020, they were told that they didn't qualify. That was true. And again, all of a sudden, then you fast forward to February, March, April. Now these poor CPAs who are, their plates are completely full already. Now they're in the, elbows deep in tax season. Well, these credits are still evolving, still changing. They don't have any other room on their plate. And so again, a lot of these business owners didn't know where to go. And so we strategically placed ourselves with some tax experts, people that are licensed CPAs, but they're not going to do your tax returns. They specialize in, isolated niches of the IRS tax code. So again, going back to a little over a year ago when I was on, we were talking about R&D tax credits. One of the most underutilized tax credits that's available to business owners. And now we're talking about the ERTC, which again, we have a team of forensic ERTC tax specialists that are laser focused on just this one tax credit, helping business owners successfully navigate and not only claim the credits, but maximize them. You know, a lot of times you hear people saying, well, you know, yeah, we're playing it safe, or, you know, oh, we're doing it, but, you know, our CPA is a little conservative. Well, these are tax credits that should be black and white. There shouldn't be gray area. There shouldn't be, you know, playing it safe. When I hear that, it means that, you know, you're not 100% confident, so you're playing it safe. Well, if you're doing that, it also means you're probably guessing, you know.
Right.
This is the IRS. These are tax credits, and it should be black and white. But, you know, again, if you have access to, or if you're working with an expert or a team of experts, you know, there's no guessing.
And it's probably comes a lot down to maybe experience in that area too, because the tax code is how long? You ever read the tax code start to finish? Page by page?
Not in a couple months.
No. Ryan, have you read the whole thing?
No interest whatsoever.
You know, so I have the FHA handbook as a PDF on my desktop. It's like 1,400 some pages.
Yeah.
I've never read that thing. You know what I mean? And that's just an FHA loan. Then you have conventionals, you get USDAs, you get all this stuff, right?
The thing is, too, is that this is true of like any sort of statutory stuff where you start reading through something and then you get like, you read 100 pages and then you get to a section and it says, hey, that last 90 pages that you read, that's superseded by the next 90 pages.
Yeah.
That's outdated. The only thing that you pay attention to is page 7 of that 90 pages. You go, oh, great. So why'd you leave all that in? Well, context. You know, it's like, there's hundreds and hundreds of pages where it's just kind of like, oh, yeah, just that box on the top is still used. The rest of it is on page 4,386 or whatever.
Yeah, it's like we want you to see how we got to where we are today.
Right.
Great. Thanks. You know,
if you're a big nerd like me, you'll go on like the MN revisor statutes page, and you can see the different revisions. All the revisions to any statute are there and available. Yeah, you can dig real deep into the weeds on this stuff.
You go down into a big rabbit hole there and spend hours.
A lifetime. I mean, honestly, that's why people like yourself and your team can specialize so much in this stuff, is because there is no way for one person to know all of this.
No.
It's impossible.
Right.
It's just not physically possible.
There's two points that you bring up that I want to focus on here. Number one, when you're talking about stuff, revisions and being outdated, that is exactly what is going on with these ERTC tax credits. If you go on to the IRS website and are looking at and trying to research and get definitive information on it, you can read pages and pages, and then at the bottom of that page, it'll say, by the way, there's no guarantee, or this information may be outdated. And the hyperlinks that they have within these articles, you click on those, and then as soon as you get routed to that, again, other sections of the IRS website, their tax code, write a big disclaimer across the top telling you this information is not up to date or is outdated.
Yeah.
So exactly what you're talking about. And, you know, the fact that we are laser focused, the fact that we are teams of specialists, we're like a breath of fresh air, not just to business owners, but to the CPAs. They're like, they don't want to take on more. They are you know, struggling to keep up with everything else. And it's a welcome for us to come in, complement them. And I think one of the keys is that we don't compete with CPAs. We complement them. We take on all the risk, all the liability pertaining to the credits that we're helping the business owners with, and we take that off of the CPA's plate. And they're like, they gladly hand it to us when they realize that we're not trying to steal their client, of course.
Right.
And it's like, yeah.
So it kind of goes back to kind of what I was saying with the FHA handbook is, you know, if a loan officer hasn't seen this type of situation and sends something into underwriting, they're kind of crossing their fingers at a certain point. Yeah. And a lot of loan officers will just be like, the answer is no, because that's the safe route, right? If you got a real experienced loan officer that has seen that situation before or has something similar to that, now they have some experience to go back on to say, okay, the last time I ran into this is what came out of it, right? And so you're more confident going in, just like your team would be. The experience of dealing with that specialized, that specific part of the IRS code, no one wants to touch it, but you guys touch it every day. That's what you live.
And this is the tough part of of this sort of business relationship, there are accountants out there, I'm sure, who have stretched their business to try and do this stuff and accommodate. It's like a business is looking to get a BPP loan or what have you, and they go, okay, we're gonna slog through this, even though we don't really know. We're busy with all this other stuff, but you're a great client, and we'll make it happen. That's fine, and maybe they got the job done right. They probably did. I hope so. But when that comes up again, it's not their specialty. So if let's just say that loan program opens up again in another year or 3 or whatever, they just copy and paste the whole thing. The CPA that did it correctly once, even though they're experienced and they're someone like Mike, they have high volume, they have all these great clients and stuff. If they've only done it once or twice, and since then they've done 1,000 of their regular types of client deals, they're not going to remember the specialized information either. We run into that all the time in insurance, where it's like, yeah, I can broker aviation insurance. Absolutely, I can sell you a general aviation type policy. What I'm really going to do, though, is I'm going to call up a guy I know that specializes in it, and that's all he does. Because, yeah, I might write it right, but I would rather know he wrote it right and give you the referral to the guy that just does that. Because I know he's not going to try and take you for my, personal lines and that kind of stuff. But specialized lines of business require specialized businesses to provide them.
And that goes back to what you were just saying, Mike. It's, an experienced person in their profession knows and doesn't want that risk or that liability, but they also, again, they have positioned themselves, and they've been around long enough, though, that they have an expert for saying like that aviation insurance, or that really unique loan. Like, you know exactly who to call, or you just send it to them, like pass it off and let them do what they do best, because you know that they, again, there's that word again, specialize in that kind of stuff. And it's, and there's so many industries. I mean, mortgages, insurance, law, medical. There's all these specialists. Your general practitioner, if you go in there and you've got, you've got some issues or whatever, you have some pain in your chest or whatever, he's probably going to order some x-rays. If he sees anything on those x-rays that he doesn't like, is he going to diagnose you? Is he going to treat you? If you need surgery, is he going to perform it? No. He's going to refer you over to a specialist. And that's what we are. We're that Swiss Army knife, but at the same time, we're laser focused on specific niches, and we're very complementary.
Yeah, phone lines are open, 651. What do we got? 651-647-2910. So feel free to jump in, join our conversation. Any questions or comments this morning, definitely feel free to join us. 651-647-2910. We also have a text line that you can text your questions into. That text line is 612-202-8321. Giving away 2 pair of T-Wolves tickets, all 4 next to each other right on the main level there. They're really good seats. We're going to give those tickets away to the best question of the morning here. So again, the call-in number 651-647-2910. And then the text line is 612-202-8321. So we're going to be talking more about to Ryan Boyd here with Last Switch. We do have some hot deals we're going to hit. And then we're going to talk some more insurance stuff too. And I got some specific questions for you, Evan. Hope you got your breakfast. Did you eat your Wheaties?
I didn't eat Wheaties, but I did have an Egg McMuffin. So hot deals first?
Yeah, let's do some hot deals.
All right.
All right, first hot deal here. We have a lot in Savage. A lot of what, you ask? It's a real estate lot.
I'm in.
We got kids, so it's acceptable.
Yeah, joke right there. You're welcome, Evan. You're welcome. It's at 14649 Sumter Avenue in Savage. This one is a 0.64 acre lot for $110,000. This is a great location. This is actually, is this the development that's right across the street from the middle schools there? Twin Oaks and Hidden Oaks, I believe.
So.
Yeah, they're super sweet lots. They're all big lots. Again, this one is 0.64 acres. Great location right there in Savage, and this one is listed at $110,000. Pebble Creek Custom Homes has a house here. I believe it's a to-be built. Probably their best floor plan, at least it's my favorite floor plan of theirs. This one is in Savage as well, 146XX Sumter Avenue South in Savage. So again, it's a to-be-built. The one you see there on the screen is a 4-bedroom, 3-bath, 3-car garage. Going to be a brand new build.
It's gorgeous.
Yeah, these houses are amazing.
This one is also on a 0.64 acre lot. 2,400 total finished square feet, and that's above ground. You can finish the basement too if you want and add additional square feet. That one listed as you see there, $995 for the price. Again, it's on Sumter Avenue in Savage, Minnesota. Going to Minneapolis, we have a condo. This one is at 5545 Chicago Avenue, number 205 in Minneapolis. List price in this one is $174,900. So it's a 1-bedroom, 1-bath, 1-car garage, built in 1979 here. It is a condo again. Pretty nicely done inside.
Yeah, there's a redone kitchen that is really looking quite pleasant for a condo space. Obviously, if you want that urban lifestyle living, you want to be able to bus to work and not worry about your commute as much, not driving from Savage, for instance.
Right.
It's a pretty prime spot.
Yep, this one again is at 5545 Chicago Avenue, number 205 in Minneapolis, listed at $174,900.
And it does have underground parking and in-unit laundry, which are, of course, two important things in condo lifestyle.
Underground, probably heated parking too.
Oh, yeah.
Which is paramount right now. Moving down to Dundas, we got a nice piece of land down in Dundas, Minnesota. This is 130 acres down there. This one is listed at $5.2 million. It looks. I know the exit, the Dundas exit. It's right by. I think it's right along 35 there. So if you're going on 35 south, you hit the Dundas exit, and it's right there to the west of 35. Again, this is 130 acres there for sale at $5.2 million. Moving up to Pequot Lakes. This is a unique property here. This one's at 4572 Main Street in Pequot Lakes. This one is listed at $125,000.
This one's wormed into my brain.
You can.
It's a little far away from me.
It's an old church.
Yeah.
It is currently being used as residential rental, but you could use it for several different things.
It's multi-use zoning.
Yep.
It was at some point a yoga studio or something, right?
I think so, something like that.
And of course, it is a converted church. Big open floor space. It also has a gigantic basement from the pictures. So,
and it's a pretty unique opportunity there up in Pequot Lakes. This one again is 4572 Main Street, and it's listed at $125,000. Going over to Prior Lake now, we have another Pebble Creek custom home. This one is at 16080 Sims Court Southeast in Prior Lake. This one is a 5-bedroom, 5-bath, 3-car garage home. I believe it's a to-be-built there as well. This is on a 0.64 acre lot. And you can see by the pictures there, you can design your own house there with Pebble Creek Custom Home. They're a fully custom builder. And the one you see there finished has 2,941 finished square feet above ground. Again, this one is at 16080 Sims Court in the southeast in Prior Lake. That one's listed at $950,000, the way you see it there. They also have a few other lots there. So Sims Court, they also have 9 lots, it looks like there, all ranging from 0.6 to 0.64 acres. So if you are looking to build in Prior Lake, they definitely have some lots available there.
And as I recall, this is backed up to like nature preserve too. So the area behind all these lots is undeveloped.
So
just beautiful.
I think you'll never have neighbors right back there, is what the deal is.
I sure hope not.
I think. So
less neighbors, the better.
Right.
Most importantly, undeveloped and not able to be developed.
Yeah.
Right.
So,
yep.
privacy.
Moving down to Red Wing, probably Evan's favorite listing of all time, I'm guessing, that we've had on this show.
Yeah, definitely.
So this one is a very unique property. So listen to this. This one is at 27858 Greens Point Road in Red Wing. It's listed at $2 million. This was a 3-bedroom, 2-bath, 4-car garage home built in 1929. The astonishing part of the best part of this lot, in my opinion, is the 405 feet of sandy lakeshore that you got right there on the water.
Yeah, all this in the picture right now, that's your lakeshore.
The whole thing, all the way around the horn there. Very unique house on it. Very unique. 3-level house, though. You go up into the 3rd level of that house, and the views are amazing.
Oh, yeah. It's a tower, basically. It's awesome.
That third level. Yeah.
Yeah.
That's your gaming room up there, Evan. If you buy this,
If I had $2 million to spare, I totally would do it.
Right?
100%.
put your gaming room up there? It's like, I don't know, it'd be amazing.
It would be awesome.
This one again listed at $2 million. This one is at 27858 Greens Point Road in Red Wing, Minnesota. Again listed at $2 million and 405 feet of lakeshore down there. And the last listing for today up in Aiken, Minnesota.
It's Docks Harbor.
I was literally steps away from Docks Harbor last weekend.
Yeah, how was that? How cold were you?
I wasn't cold because we were inside the ice house, so I wasn't that cold. Setting up was a little cold, but it wasn't that bad. The fishing was slow. 2 days we caught one 12-inch walleye in our house.
Oh,
the other house that we were with caught nada. So it was slow. But this is up at 39629 State Highway 18 in Aiken, Minnesota. This one's for $2.5 million. Let's see here. The stats on this one. I know they got a bunch of RV sites in there. A bunch of outbuildings. They got the lodge up there.
Yeah, it was like 32 RV hookups. It's got boat slips. It's got room for expansion of boat slips. It's a turnkey type commercial property for running your own resort.
Yep.
So much potential.
Four total acres, it says here. And the lot dimensions 337 by 635 by 310, so 4 total acres up there. So that's Docks Harbor up there on the north side of Mille Lacs, Lake Mille Lacs. Again, that one listed at $2.5 million. If you have questions or want any more information on these hot listings, definitely feel free to reach out to us. You can visit us at any time at minnesotahometalk.com. You can set up your own custom home search there. You can connect directly with Jason and I through the website as well. And then we also have lots of other free stuff, free reports on buying and selling. And we have is refinancing right for me button. So if you have been in a coma for the last 2 years and you haven't refinanced yet, there's still an opportunity for that. And if you want to know if refinancing is right for you still, you can click that button. It links directly to me, and I can certainly help you out and let you know if there's still an opportunity to save you some money with where rates are at currently. And you could connect to Ryan Boyd as well, right on the website there. So visit us at minnesotahometalk.com, and we'll get you connected with any of our outstanding radio show partners that we have.
I'd also like to throw a little hot deal in here at the end of your hot deals, and you mentioned something. You mentioned free a couple times. We also mentioned those T-Wolves tickets that Mike and Jason are giving away. I'd like to throw some free money out there to people, so you can have some spending cash, some pocket money when you go to the T-Wolves game. Is that for the radio show this morning, and moving forward for that matter, our process of with these ERTC tax credits starts with a 3-page survey. It typically takes our clients about 30 minutes to complete this survey. So if you're on the fence and you're questioning whether or not you qualify, or you'd like to see if your company qualifies, or if you want to see, you want to bring something to your boss and say, hey, you know what, I think we should look into these. Call in, let's talk real quick, but fill out the 30-page survey, and I'll give you $500. $500 to fill out that survey, as long as it's legitimate, and we can follow up with you, and we can have a candid conversation with that business owner or that decision maker, and we'll put $500 in your pocket to spend at the T-Wolves games. That'll pay for a couple hot dogs.
Yeah, 2 hot dogs and probably have some popcorn, maybe.
Yeah,
and then that's probably gonna eat that 500 up. Well, that's awesome. That's great. Thanks for doing that, Ryan. Again, phone lines are open, 651-647-2910. And then the text line is 612-202-8321. We did have a caller call in, so we're going to go to the phone lines. Good morning, Paul.
Hey.
Hey, thanks for calling in. How can we help you?
Well, I've got a question for Ryan. And that is, he mentioned these credits were economic stimulus
increase sanitation of your facility. And that's not even a complete list. Those are just a couple of things that I'm just throwing out there to see if I, hit a nerve. Can you answer yes to any of those?
Oh, yeah. Oh, absolutely. Absolutely. I mean, businessmen have to pivot all the time. And so, yeah, a bunch of those make sense. But we were fortunate. And so, appreciate that. I'll look forward to talking to you sometime.
That sounds great. Likewise, Paul. Appreciate you calling in this morning.
You bet. Thanks.
Thanks, Paul. Phone lines are open, 651-647-2910. You can call us with any questions dealing with tax credits that Ryan Boyd from Last Twitch is talking about, or anything dealing with real estate, mortgages, or insurance. All those questions are welcome. Again, this morning, the phone number is 651-647-2910, and the text line is 612-202-8321. Ryan, so it brings up Paul. Paul brought up some interesting point there. There's probably a lot of misconception of, will I qualify? How do I qualify? There's no way I'm going to qualify. Why don't you, I guess, give us some maybe success stories of people that thought that they had no opportunity here, and then voila, there it is. They got tax credits coming their way.
I would love to. And again, these numbers, these examples, these success stories. Wow.
It's been a rough morning.
It's
been a rough morning.
I'm like, hopefully the day gets better. All of these success stories, all of these examples come from the last 2 weeks, Mike. And I'm just touching on a couple of them. This isn't even a full list of the last 2 weeks of clients that we're working with. We've got a debt collection company that are with 42 employees. So I'm citing the number of employees and the amount that they qualify for that we're going to help them get. So again, this should strike nerves. This should people can relate to these things. 42 employees, $806,000. There's a marketing and website development company with 17 employees. 17 employees. They're going to get $298,000 back.
Wow.
A nonprofit pregnancy clinic, $256,000. Online distribution and shipping company with 95 employees. They're coming in at $1.3 million. Construction company with only 30 employees. Now, this is going to be a lower average, but there's a reason for that. 30 employees, just a measly $59,000. Another nonprofit performing arts company with 10 employees, $159,000. Jewelry company, with 34 employees, $623,000. Cleaning company with 245 employees are getting $6.2 million.
Wow.
And I'm bringing up that last one. That's one of the biggest single recoveries we've gotten. They're the third largest. Our top three clients, the top three largest amounts that we're helping clients successfully get and navigate these waters, were all told that they did not qualify.
By who?
By their CPA. One of them basically self-censored themselves based on the revenue requirement. They're like, "Yep, we're doing way better than we were in 2019. We've actually got more employees in 2021 than we did in 2020 and 2019." And they had approached their CPA early on in the process, early on when these were coming out, and they had never been followed up with. They had never, went back. They got referred to us. I said, "Hey, fill out this survey. It's going to take you about 30 minutes. We're going to be able to tell you definitively, but most importantly, we're going to be able to get an estimate to you to say, hey, if this is, let's see if it's worth your time, first of all."
Right.
Which it
obviously was.
Yeah.
That's incredible. That's a big dollar. That's a big dollar amount there. We're going to come back to that. We do have another caller on the line here. So we had Pat called in with a question as well. Pat, are you there?
Yes, I am.
Hey Pat, thanks for calling in.
Good morning.
Good morning. Say, I got a question in regard to refinancing my personal condo. I have a balance of right around $65,000, and I called a major bank that's holding my mortgage right now, and they're telling me that the minimum that they'll borrow is to refinance is $80,000.
Okay.
It's at a lower interest rate. I think my original rate is at 5.7. And my question is is that kind of the norm for a minimum amount to refinance on a situation like mine? Which is fine. I mean, it's $80,000, but then my monthly payment's going to go up. And even though I'll get an equity of maybe $15,000 out of it, my intent was just to more or less refinance what I owe on the place. My question is that the norm of having a minimum amount that they'll borrow?
So, Pat, that's a good question. There are a lot of companies out there that will have some sort of minimum loan amount. Each one is going to be different, so one might be at 50, one might be at 80. It can range. We can certainly help you out with that. You got a $65,000 balance. We could help you out with that refinance. You said your current rate was 5.25 right now?
I think it was
5.7.
A little higher than that. I believe it's 5.7. I've only been at about 2.5 years, 3 years.
Gotcha. Okay. And then did you do a 30-year fixed?
Yes.
Okay. Gotcha.
And I want it lower than that, obviously, 15 or a 20, something like that.
Yep. Gotcha. That's something that we can certainly help you out with. So what we'll do is we'll grab your contact information, have Evan make sure he gets your contact information here, and then we can give you a call and we can get that ball rolling with you on Monday.
Yeah, I'd appreciate to have a conversation to pursue that, get a little more information.
Yeah, absolutely. No, we appreciate you calling in, Pat. Thanks. We'll touch base on Monday.
Very good, sir. Thanks for your time. A great show.
Hey, thanks, Pat. We appreciate it. Phone lines are open, 651-647-2910. That is the phone line to call in with your questions. Again, that's 651-647-2910. And we have a text line where you can text your questions in to 612-202-8321. Again, 612-202-8321 is the text line. So a lot of times, going to Pat's situation, a lot of times when I see the lower loan amounts on there, it's people that have been paying their loan balance down for a long time, right? So maybe you start off with a $250 loan balance, 17 years ago, and you've paid it all down and you're down to 65. With his situation here, if you're that deep into a loan and he's at 5.75, it might not make sense to refinance because you're paying off so much more principal right now because you're so far deep into that loan, because mortgage loans are very interest heavy up front and then they're principal heavy in the back end. So he's only a couple years into his loan, so it's definitely going to make sense for him to refinance. If he did a 30-year fixed and he was 20 years deep in that thing, it might not make sense at this point. And so it's one of those, numbers things that we kind of run on the back end to say, okay, the cost of the refinance is going to be this. This is what it's going to save you. Does it make sense to do it? I can already tell in Pat's situation it's going to make sense. People, though, that are deeper into the loan, like I said, a lot of times that doesn't make sense for them to refinance. You're better off to just ride that loan out because a majority of your payment right now is going towards principal. And if you refinance, you're kind of resetting a clock there. So just my little 2 cents there. What do you think about that, Evan?
I think that makes sense. How many, I was thinking about this, maybe it was yesterday or Thursday. How many clients do you have that when they first come in, they understand what an amortization schedule is?
I would say, if I had to guess a percentage, probably, I don't know, maybe 25%.
That's pretty good. That's better than I would have expected.
Maybe somewhere up there, 20 to 25, maybe something like that. Do you know what an amortization schedule is?
Do I know?
Yes.
No, I have no idea.
Do you know, Ryan?
I do, yeah.
Okay.
Yeah, no,
I figured you guys would.
So I was thinking about this in regards to, not to again drag us into the insurance world, but I was thinking about it in regards to insurance premium, because banks have a product where they make most of their money up front. Your first few years of payments, the bank is making all the money on those.
Very interest heavy. Yeah.
Right, exactly. It's very much biased in the bank's favor. Whereas with insurance, most people go, oh, well, their insurance company is charging me so much, they're making so much off of me. But they don't have that luxury. If I write you a homeowner's policy, you may intend to stay in your home for 30 years, but there is no guarantee. There is no contract that says that you're going to have that insurance policy for 30 years. And so the first chunk is going to the insurance company's profits, and later it's not. So insurance companies actually don't really make money on premium. They make money off of investing money and the float. Whereas with, a lender can go, yeah, well, that first year, 90% of it goes to us, and 10% of it goes to your principal.
Right?
But don't worry, in your 29th year, it's the reverse. Only 10% goes to us, and the rest of it's just going to principal or whatever.
Right. Yeah, it's kind of crazy how that flip-flops like that.
Yeah.
And how it works differently between the industries. And speaking of insurance, Evan, so I was thinking yesterday and on the way down here, Ryan was in the credit repair industry for a while. I'm very familiar with credit and credit repair, things like that. When it comes to insurance, a lot of times people just don't know like what affects premiums, right? So why does my neighbor have this premium and maybe I have this one over here, right?
Because your dog keeps biting people.
So there's a lot of different factors that go in. So I was going to try to get a little general with you to say, like on the credit repair side of things, someone comes to me and says, Mike, what are the top 2 or 3 tips that you would give me when it comes to credit? I would say, number 1, make sure you make your payments on time. Number 2, keep your credit card balances low. I recommend that you keep your revolving accounts at 20% or less. Don't never charge a credit card over 20% of the limit. If you can do those 2 things, you've knocked out 75% of the mistakes that most Americans make on their credit, right? And when it comes to insurance, Evan, is there anything where someone says, what could I do to lower my insurance premiums? You would say, what?
Transport yourself forward in time 5 years. Again, transport yourself forward in time 5 years. If your insurance premiums are poor, it's going to be caused by a couple things. Credit is a huge driver in insurance, just like it is in everything else. If you can improve your credit score by working with any number of the credit professionals that we recommend, that will help your insurance premium. But the bigger factor is risk and claims factor. Risk is going to be driven by your age. If you've got teenagers driving cars in the house, oh my goodness, that is such a huge spike in cost. It's colossal. But also your zip code's a really big part of it. Someone who lives in the city is generally at a much higher risk of getting into an accident than someone who lives, in complete seclusion. So, like I've got an urban zip code. My insurance premium's higher than if I lived 3 zip codes to the west or to the north or to the south.
And you're talking auto?
Yes.
Right? Auto insurance there?
When talking about homeowners insurance, it's much more, it's region specific. Here in the Midwest, in the upper Midwest, we do deal with a lot of hailstorms. We're still not seeing quite the claims volume of losses on hailstorms and roofs and everything is like Florida, but we're not far behind. The amount of re-roofs that they have to take care of. But that is something that the insurance company is just going to price into everybody. So that's going to be the same for your neighbor as it is for you. Roof age plays into that big time. But the number one thing is claims history. As soon as you file a claim, every insurance company has like a different statistic for this, but it's a huge increase of your likelihood of filing a future claim. Because they know you've broken that mental barrier that you go, well, insurance is there to be used. And, I would agree with that, but ultimately speaking, the question of if it's worth filing a claim is as soon as you enter into that territory, the insurance company knows, and that stuff doesn't fall off your record for 5 years, which is why I said transport yourself forward in time 5 years. So I generally recommend higher deductibles than a lot of other people in my industry. Not hugely high. I would say normally about $2,000. And it's not because I think that that's like the financially prudent thing to do. You're only going to save a couple $100 a year. So the crossover point, if you have a claim, maybe it's worth it, maybe it's not. It's more about putting the client in the mentality that insurance is only for something that you can't afford to fix yourself. Because if your deductible is only $500, then anytime something goes wrong, I'm getting a call from my client going, well, is it worth filing a claim on this? And I go, well, yeah, the insurance company will pay you $1,000 or $2,000 to help, like the neighbor kid broke your picture window on the front of the house and your deductible's only $500. Absolutely. The insurance company will cover it. You're going to get a new window and they're going to pay the, $2,500 for that renewal by Andersen picture window. But your rates are going to double, and they're going to be double for several years because you didn't buy the forgiveness package, or you did and you already have one claim on your record or any number of that kind of stuff.
Gotcha.
Whereas if you put that deductible in that $2,000, $2,500 range, it puts people in that mindset that it's like, if it's just a little thing, I'll just fix it myself. If the whole roof needs to be replaced, or we have a fire and smoke damage and it's 10, 20 grand in repairs, that's when you should be thinking to make a claim, because then it's definitely worth any rate increase you're going to face.
Very, very interesting. So claims. You mentioned credit, right? You claim history. So credit, claim history. Anything else?
Those are the two huge ones for homeowners. Obviously, there's other little stuff. The condition of the property generally and the size of the property are going to drive a lot of stuff with premium. You may think, hey, all of our houses in this development are the same. But if your neighbor has a roof that's 10 years newer than yours, you have a 15-year-old roof and they have a 5-year-old roof, they're going to be paying a lot less in insurance premium. And
when you say a lot, we're talking
sometimes as much as 15-20%.
Okay.
Even with the same company, same nuts and bolts, everything else. Like, we're just saying there's two Mike Oversons that live next to each other with the same credit, same claims history, all that stuff, and one just has a roof that's only 3 or 4 years old and the other one has a roof that's like 15 years old. It can be a colossal difference. It also can make a big difference in what coverages you even have available to purchase, because once your roof is over a certain age, a lot of companies will just say, we won't give you replacement cost on this. We'll only give you actual cash value, which means on a claim, after your deductible, we pay a percentage of what's left, as opposed to you pay the deductible and we pay the rest, which is not as good.
So I had a client call me the other day. I'm actually doing a refinance for one of my previous clients who moved up to Walker, Minnesota, back in 2017. And so I was asking them how much his insurance was. And he said a number that was like, there's no way that can be correct. Like, that seems really high, really far from a fire station. So that's the exact reason. So he's like, here's why my insurance costs this. He's like, my insurance agent said, look, if a fire starts in your house, that thing burns down to the ground before any sort of fire, before the fire department can get there.
Evan, you knew right away.
Yeah, well, and that's just it too. Is it's not something that we run into a ton. Most of the work that we do is here in the cities and the kind of surrounding area. And honestly, Minnesota is dotted enough, aside from like the really rural areas and like up by Virginia, Minnesota, and so on, that you're honestly never that far away from a fire department, except sometimes you are. So yeah, there's fire risk classifications when it comes to houses. Most of the stuff we do is what we would call Category 3, which is basically you live pretty close. You're not like standing there looking at the fire department across the street from your house, but there's a fire hydrant nearby. There's a fire department that can be at your house in 10 minutes or less, that kind of stuff. And yeah, that does make a difference. When I was doing news down in Iowa, I covered a house fire. It was like the coldest day of the whole year that I was down there. But it was rural enough that I got there about the same time the fire department did, and the house was already clearly going to be a goner. At that point, the only real question was if they were going to save the other houses in this development. It was a new kind of exoburban development, and it was I want to say about a 25-minute drive from downtown.
Okay.
And yeah, on a windy day, if you have an exterior fire, the wind will drive the fire across the house, because it's like, blowing on your...
Right.
Yeah, and so in that sort of situation, a minor fire, you're probably fine. A minor fire, the fire department shows up and just goes, oh, you put it out yourself. Thanks. Good luck with the insurance company. Sorry about the smoke damage. Yeah, exactly.
Yeah.
A major fire, it's kind of like every second matters, because at some point the damage becomes so great that the house just becomes a write-off.
So let's talk about replacement costs, because that's kind of where we're leading into next here. So I'm curious now, with materials, right? So COVID does a lot of weird things, and supply chains for everything, right? There's chip shortages for cars, and obviously lumber was crazy there for a while. So what has happened in general to insurance premiums over the last couple of years? Because if a house burns down now, it's more expensive to replace that house versus just 2 or 3 years ago because of material costs. Have insurance premium like floated with costs of materials and stuff?
Yes, to a degree. A lot of that stuff is already priced in. So most policies that I write include an additional percentage on the base value of the home. So something that used to happen a lot, and this has been less true since COVID and the increase in home, like actual building costs, is, Mike's team at Luminate will send me a message saying, hey, we've got client, Roy, and he wants, to get insurance for this house. And I go, great. And they go, the loan value is $300,000. And then I calculate the rebuild cost, and the rebuild cost is only $250,000. Well, loan companies don't like to see that. Even though technically, if the house can be rebuilt, that satisfies the terms, you have to jump through a bunch more hoops if that number is lower than the loan amount. So what a lot of mortgage companies do, and they do this for multiple reasons, but my favorite part is it just makes this whole process easier, is they offer percentage increases on that calculated rebuild cost, because no internet calculator or whatever is going to encompass everything about your home.
Right.
No matter how detailed I get, I go, exactly 68% of your house has hardwood floors, and you've got 10% plaster walls and all that stuff. Ultimately, there's some variability in all this, and, contracting costs vary depending on, the phase of the moon and whatnot. And yeah, lumber prices can go all over the place. So we calculate a rebuild cost based off of the square footage, the materials, the location, all that stuff. And then we can add a percentage onto that to buffer for those increased costs. The main advantage of that is in the event of a widespread national disaster. So here that would be tornadoes primarily. In other areas that might be earthquakes or forest fires, hurricanes, any sort of thing where all of a sudden it's not just your house that needs construction, it's everyone in the subdivision that needs construction. Even if it's not total loss or whatever, all of a sudden this demand for labor goes through the roof and prices skyrocket. Well, if you have, a $300,000 house insured for exactly $300,000, now you're really only covered for 2/3 of your cost. Whereas if you had an additional 50% of cost overrun protection, you're still going to get a house that's the same. They're not going to build you a 50% bigger house, but they will pay an additional 50% of that rated value to rebuild your house the same as it was before. And that's built into most policies in some percentage. Some have an uncapped percentage. Some of them it's 100%. Some of them it's 50%. I don't generally go below 50 unless someone absolutely needs to in order to make closing work. It's rare, but it happens. But it's a very low cost coverage because it doesn't really drive rates that much. Total losses, not the biggest concern for insurance companies.
So, but that's not standard, right? So you're saying,
right, yeah, a very basic policy won't include that at all. If you just go online and you type in, I need home insurance right now, and you just click on the cheapest option or whatever, you will not have that. It is not something that is included by default by most carriers.
So you're saying that, and going back to Mike's original question about the COVID or the pandemic and how that's affected insurance premiums, it kind of sounds like most of that stuff has been over the years has been built into the policy already. So he hasn't seen that point or that those premiums float up with the increased cost of building costs and lumber and stuff like that.
Because there's already that buffer in there. So as things kind of float and costs and stuff float, you got that buffer in there. And so then it's like, well, we kind of already have, we already know it's not an exact science of what it's going to cost to rebuild this thing, because that cost could be different tomorrow because you got labor, you got materials, you got this and that. And so
it's something that should be periodically reassessed for that base number every year or two. But that percentage protects you from, lumber prices are 20% higher, or labor costs went up by 20% because of a new minimum wage law or whatever. Any number of things, that's the idea, is it protects you from that. We have your guy on the phone, by the way.
Oh, fantastic.
Yep.
Oh, nice.
Good
morning, gentlemen.
Good morning.
I am really good. Thanks for having me on real quick.
Yeah, is this Jared?
Yes, it is. Jared Havens.
Good morning, buddy. How you doing?
Good morning, Jared.
I'm really good.
So we just got a couple minutes here yet. Thanks for calling in. What can you enlighten us with this morning, Jared?
Yeah, I wanted to jump on just because I know what Ryan Boyd does. He's a good friend of mine. And, I wanted to reach out. I'm a business owner, as everyone knows. I've been on the show. We have multiple employees. And if there's anyone listening right now that is in similar situation, you have a business, you've heard about these credits, ERTC credits or R&D credits, you're wondering, how does that work? Do I qualify? Or you're being told by your CPA that you don't? I would highly recommend connecting with Ryan as we did, because even my business partner and I, Brian, we were skeptical, like, I don't know if this will work for us. And in 2020, in the shutdown, we actually did better as a company. But we were impacted still. And we were able to work with Ryan and really go through that checklist. And we qualified. And in fact, we qualified into the 6 figures, which was absolutely amazing.
Awesome.
And so, it's huge. It really allows for growth, especially for us, because we felt the impact of COVID this year more so than 2020 or in 2021. So I highly recommend people look into it.
Perfect. Thanks for the call, Jared. We definitely appreciate it.
Thanks, Jared.
Thanks, Jared.
That's it, I think.
That's everything. Thanks for listening, everyone. We're going to be back next week. We'll enlighten you with more of our knowledge on everything dealing with mortgages and real estate. Take care and have a great weekend.
This has been a paid program. The views expressed are not necessarily those of the management or ownership of SCORE North, KSTP AM 1500.
SCORE North on AM 1500 KSTP St. Paul, Minneapolis, 94.5 KSTP FM St. Paul HD2, and on SCORENorth.com.
Great Waters Financial specializes in helping you retire comfortably. When it comes to seeking retirement guidance, you don't need a salesman, you need an ally. Great Waters Financial doesn't have a hidden agenda. Their professionals at Great Waters Financial focus on what matters, your financial peace. Start planning for your future now and make your money work for you. Great Waters Financial is the official financial planning service of Cover Your Assets. For more information,